Imagine liquidating $20 million of tech stock, buying a 10,000-acre pristine mountain paradise in Montana, and expecting to sit back with a glass of bourbon while your asset peacefully appreciates. That is exactly what a Silicon Valley tech founder, let's call him David, thought he was doing when he purchased his dream property. What nobody told David was that inside his first 12 months of ownership, that multi-million-dollar dream would quietly drain another $2 million out of his bank account just to keep the gates open. Most people see a private ranch as the ultimate flex of wealth. But beneath the jaw-dropping sunsets and timber frame lodges lies a complex, high-stakes business machine designed to devour cash if you do not know how to run it. To understand why a billionaire's dream can turn into an operational nightmare, you first have to look at the sheer scale of modern ranch infrastructure. When David bought his 10,000 acres, he did not just buy land, he bought 50 miles of barbed wire fencing, 30 miles of unpaved gravel roads, complex irrigation systems, stock tanks, and high-capacity water wells. In his second month, a sudden summer flash flood washed out a 3-mile stretch of his primary access road. Repairing it required heavy machinery, hundreds of tons of gravel, and a specialized crew. The total bill? Nearly $200,000, the price of a brand-new Italian supercar, wiped out in 48 hours just to drive onto his own property. Equipment costs hit next. A ranch cannot run on passion, it runs on heavy diesel machinery. A single modern agricultural tractor can easily cost $300,000. Add a commercial fleet of balers, trailers, backhoes, and utility vehicles. And David was looking at over $1 million in iron before he even bought a single animal. This brings us to the core engine of traditional ranching, the livestock operation. David envisioned a picturesque herd of Black Angus cattle grazing peacefully on his green hillsides. But livestock is not a static asset. It is a living, high-risk supply chain on hooves. Purchasing a baseline starter herd of 500 breeding cows requires well over $500,000 in upfront capital. In a perfect year with abundant rainfall, natural pasture grass feeds the herd through spring and summer. But when an unexpected dry spell turns lush green fields into brown dirt, you face a brutal choice. Sell your herd at a loss or import thousands of bales of high-grade alfalfa and hay at record-high market prices. During a harsh winter, feeding a 500-cow herd can cost tens of thousands of dollars every single month just to keep them alive. Of course, David was not planning to wake up at 4 in the morning to fix frozen water pipes in sub-zero blizzards or deliver calves in torrential rain. That required hiring a full-time ranch manager. A truly top-tier manager is part soil scientist, part master mechanic, part veterinarian, and part corporate executive. They command six-figure salaries, accompanied by free housing, utility allowances, and farm vehicles. Layer on full-time cowboys, mechanics, and seasonal farmhands, and your annual labor costs instantly rival those of a mid-sized urban company. At this point, looking at a mountain of bills and zero profit, David was asking himself the exact question every new owner asks. Why on earth do the world's smartest investors buy these properties? Media moguls like John Malone, who owns over 2 million acres across America, and Red Turner do not pour their fortunes into raw land just to burn cash on tractor fuel and cattle feed. They know something most first-time buyers completely miss. A private ranch is actually a multi-layered financial matrix, and the traditional cattle business is only the cover story. What David was about to discover was a series of hidden, non-traditional revenue streams built directly into the soil, inventions so lucrative they could turn his massive money pit into a highly profitable, self-sustaining enterprise. But to unlock the biggest payout on the property, he had to look far beneath the grass. While David was still reeling from the shock of tractor bills and repair costs, his seasoned ranch manager sat him down and introduced him to the true business model of high-end land ownership. Traditional livestock sales are often just a break-even exercise designed to maintain active agricultural status. The real money lies in optimizing the natural assets sitting directly on top of, and deep beneath, the land itself. The first step in David's financial turnaround was converting a small, unused corner of his 10,000 acres into an elite outdoor retreat. Wealthy executives and international travelers will happily pay thousands of dollars per night for total privacy, pristine nature, and authentic Western experiences. By building a handful of high-end timber cabins and hiring specialized wilderness guides, David launched a luxury hospitality division. Guided fly fishing on his private mountain streams and exclusive trophy elk hunting permits began generating hundreds of thousands of dollars each autumn. single-handedly covering the annual payroll for his entire ground crew. Next came resource monetization. In drier regions, water is actually more valuable than gold. Because David's ranch held senior water rights dating back to the late 19th century, he possessed a legal claim to millions of gallons of pristine mountain water. During peak summer droughts, nearby agricultural conglomerates and growing municipalities paid top dollar to lease his excess water allocations. Without moving a single piece of heavy equipment or raising additional livestock, David unlocked a steady stream of passive, high-margin cash flow. Then there is the emerging frontier of green energy and carbon credits. Major energy developers are constantly searching for vast contiguous tracts of land to build commercial wind farms and solar arrays. By leasing just a fraction of his high-elevation ridgelines to a renewable energy firm, David secured long-term, guaranteed monthly lease payments guaranteed for 30 years. At the same time, massive corporations looking to offset their industrial emissions pay ranch owners carbon credits simply to preserve forests and practice rotational soil management. The land was suddenly paying for itself in 4 or 5 different ways simultaneously. However, just as David began to feel like a financial genius, he ran directly into the terrifying reality of environmental and operational volatility. Operating a private ranch means stepping into an unpredictable ecosystem where a single bad season can destroy years of progress. A sudden summer wildfire can sweep across thousands of acres in a matter of hours, incinerating decades of timber, destroying miles of expensive fencing, and forcing the immediate emergency evacuation of livestock. Even without catastrophic fires, market volatility remains a constant threat. Cattle prices swing dramatically based on global trade agreements, diesel fuel prices, and feed costs. If fuel prices spike, the cost of running heavy machinery and shipping livestock doubles overnight. Meanwhile, timber values and mineral lease rates can plummet during economic downturns, instantly shrinking predicted revenues. To make matters worse, tax structures and local zoning regulations contain brutal traps for the unprepared owner. In most states, agricultural land benefits from massive property tax discounts, often reducing annual tax obligations by up to 90%. But to keep that valuation, you must strictly satisfy state-mandated production thresholds every single year. If David failed to run enough cattle or harvest enough hay, local tax authorities could instantly reclassify his 10,000 acres as high-value commercial or recreational real estate. His annual property tax bill would skyrocket from $30,000 to nearly $500,000 overnight. Yet, despite the constant threat of wildfires, market crashes, and tax traps, billionaires like John Malone and Ted Turner continue to aggressively buy up every available acre of Western land. In fact, America's largest landholders rarely sell a single acre once they acquire it. David could not understand it. Why do the world's most sophisticated financial minds willingly hold assets that require constant management, face constant natural hazards, and offer unpredictable cash flows? The answer was something David's corporate attorneys were about to reveal to him, a series of legal tax loopholes and generational wealth preservation strategies so powerful that they make a private ranch the ultimate financial fortress. When David met with his team of wealth managers and tax attorneys, he finally understood why the world's elite view private ranches not as luxury toys, but as the ultimate financial defense mechanism. In a volatile global economy where stock markets can crash, paper currencies lose purchasing power to inflation, and commercial real estate faces changing demand, raw physical land remains a finite, unprintable asset. There is only a fixed amount of land on Earth, and large, water-rich properties are becoming rarer by the day. The primary financial secret lies in specialized tax mechanisms designed by the government to encourage land conservation. One of the most potent tools David's attorneys introduced to him was a conservation easement. By voluntarily agreeing to legally surrender the rights to commercially subdivide or build high-density housing on his 10,000 acres in perpetuity, David created a massive, permanent income tax deduction. This single legal instrument generated a multi-million-dollar tax offset that wiped out his personal income tax liabilities for several consecutive years, effectively refunding a massive chunk of his initial purchase price. On top of conservation incentives, active ranching provides access to aggressive corporate depreciation schedules. Everything David purchased to run the property, tractors, trucks, barn infrastructure, solar equipment, and stock fencing, can be depreciated against his active income streams. Paper losses generated by the cattle operation can frequently be used to offset profits earned in entirely different business ventures, converting what looks like an operational loss into a highly sophisticated tax shelter. Furthermore, when an owner eventually decides to transition out of a property, the tax code provides the 1031 exchange mechanism. This allows an investor to sell a massive landholding and roll the entire capital gain directly into another qualified real estate asset without triggering immediate capital gains taxes. By continuously deferring tax liabilities, wealthy family dynasties compound their wealth across generations without losing vast portions of their fortune to federal taxes upon every sale. Yet, beyond tax deductions, wealth preservation, and passive energy checks, there is a psychological asset that money can rarely purchase in modern society: total privacy, autonomy, and security. Owning thousands of acres of pristine wilderness provides an unmatched personal sanctuary. In an era of increasing digital exposure and urban crowding, having your own private domain complete with fresh water sources, solar power, private timber, and endless open space represents the ultimate form of independence and personal control. When you look at the entire financial ecosystem through David's eyes, the true economics of owning a private ranch become crystal clear. It was never about turning a quick profit on a herd of cattle. It is a long-term game of multi-generational asset preservation, massive tax optimization, and bulletproof financial defense, wrapped inside a trophy asset that offers a lifestyle no traditional stock or bond portfolio could ever replicate. For tech moguls, media titans, and industrial dynasties alike, a private ranch is far more than just a piece of real estate. It is a permanent financial fortress built directly into the earth.